In the business world, it's dog eat dog, and you need every bit of competitive edge you can possibly get. Whether you're a salesperson, an entrepreneur, a small business owner, or corporate executive, you've landed on the podcast that gives you that edge and more. This is the Business Coach Unplugged Podcast. Exploring the strategies, tactics, and mindset shifts needed to elevate your business and leadership skills to new heights. Your host has walked the walk. He's coached thousands of clients to remarkable results and rubbed shoulders with legends like Tony Robbins, Ken Blanchard, Jack Canfield, and Brian Tracy. It's practical advice, inspiring stories, and the occasional dose of tough love, helping you to overcome challenges and seize opportunities. This is the Business Coach Unplugged Podcast. And now your host, owner of Potential in Motion, coaching you to the edge of what's possible, Tom Kelly.
Welcome to the Business Coach Unplugged Podcast. I'm your host, Tom Kelly. Today's episode is a must-listen if you're a small business owner, entrepreneur, or someone dreaming of starting your own business. Every now and then, legislation comes along that truly makes a difference for small business owners. I'm not talking about complicated tax loopholes or obscure regulatory changes that only affect Fortune 500 companies. I'm talking about real, impactful policy changes that hit home for the businesses that form the backbone of our communities. That's exactly what happened this past 4th of July. On Independence Day 2025, the President signed into law what's being called the One Big Beautiful Bill Act of 2025, a sweeping tax and spending package designed to boost the American economy. But for those of us who work with, support, or operate small businesses, this bill is much more than just another piece of legislation. It's a game changer. In today's episode, I'm going to walk you through the most important parts of this bill that impact small business owners. I'm going to break it down in plain English. I'll share what each provision means, why it matters to your business, how you can leverage these changes to save money, invest in your company, and grow, and I'll give you a real-world example for each one. By the time we're done today, you'll not only understand the law, you'll have a plan of how to use it. So let's dive in. Provision number 1 is a permanent 20% pass-through deduction. One of the biggest wins in the Big Beautiful Bill is the permanent extension of the 20% qualified business income or QBI deduction for pass-through entities. This applies to S corporations, LLCs, partnerships, and sole proprietorships. This deduction was originally passed as part of the 2017 Tax Cut and Jobs Act and was set to expire in 2026. But now, it's permanent. What does this mean for you? If your business is eligible, you can deduct up to 20% of your qualified business income before calculating your federal taxes. That's like getting a 20% off coupon from the IRS on your business profits every single year. And here's something new. The bill adds a minimum inflation-adjusted deduction floor of $400, so even very small businesses under the income threshold get a baseline benefit. This creates predictability. You can now plan for the long haul without worrying about this deduction going away. So here's a real-world example. Maria owns a boutique graphic design studio structured as an S corporation. Her business earns $150,000 in qualified business income. Under the QBI deduction, she can now deduct $30,000 before calculating her federal income tax. That deduction alone saves her nearly $7,000 in taxes this year. With the deduction now made permanent, she can confidently plan to reinvest those savings into marketing and hiring a part-time designer. Provision number 2, boosted Section 179 expensing limits. The Section 179 limit for expensing equipment, vehicles, and property has doubled from $1.25 million to $2.5 million. This allows you to immediately deduct the full cost of qualified equipment or software in the year you buy it, rather than depreciating it over time. Let's say you invest in new machinery, office equipment, or even a commercial vehicle. Instead of spreading the tax benefit over 5 years, you get it all in year 1. That's a massive win for your tax bill and your cash flow. This also makes it easier for small businesses to grow faster without waiting for tax benefits to trickle in over several years. A real-world example? Kevin owns a commercial HVAC business. In 2025, he upgrades his truck fleet and buys a new $200,000 diagnostic system. Thanks to the new $2.5 million Section 179 cap, he deducts the entire $200,000 in 2025, reducing his taxable income and saving around $42,000 in taxes, money he uses to train 2 new technicians. Provision number 3 is the 100% bonus depreciation returns. Bonus depreciation is back and back in full force. The bill restores 100% bonus depreciation for qualified property placed in service beginning in 2025. So in addition to your Section 179 write-offs, you can write off the full cost of other qualifying assets like improvements to leased space, manufacturing equipment, or even large-scale IT investments. This makes capital investment more attractive and helps keep your business competitive. You're rewarded for growth. A real-world example, Sophie owns a fitness center and spends $500,000 to build out a new training area in a leased space. She uses bonus depreciation to write off the entire build-out in the same year. That deduction saves her nearly $105,000 in taxes and allows her to offer new premium training services that boost monthly memberships. Provision number 4, expanded qualified small business stock exemptions. If you're running a startup or growing a business that may one day raise capital or be sold, pay attention to this one. The Big Beautiful Bill increases the QSBS asset threshold from $50 million to $75 million. This expands eligibility to more companies. Even better, the tax-free gain structure is now upgraded. If you hold your stock for 3 years, you can exclude 50% of the gains. If you hold it for 4 years, 75% exclusion. And if you hold your stock for 5 years or more, 100% of the gains are tax-free. The cap on excluded gains has also been increased to $15 million or 10x your investment basis, whichever is greater. So here's a real-world example. Lisa launches a software company and raises capital under QSBS rules. After 5 years, she sells her business for $10 million. Under the new rules, the entire $10 million gain is tax-free. That's a $2 million plus tax savings compared to the old rules, and incentivized her to hold and grow the business longer, creating jobs and value along the way. Provision number 5 is the SALT deduction workaround for pass-throughs. State and local tax or SALT deduction caps have been a pain point since 2018, especially in high-tax states. Now, pass-through entities like S corporations and partnerships can deduct state and local taxes at the business level. That means you bypass the individual $10,000 SALT cap. And for individuals, that SALT cap has now been raised to $40,000 through 2029. That's a meaningful shift, especially for business owners in states like California, New York, Illinois, or New Jersey. So here's a real-world example. Alex runs a marketing agency in New Jersey. His S corporation pays $35,000 in state taxes. Instead of being limited to a $10,000 deduction personally, the agency now deducts the full $35,000 on its tax return, saving Alex over $7,000 in federal taxes. Provision number 6, gig economy and IRS relief. This one is all about cutting red tape. Gone is the $600 threshold for reporting income on apps like Venmo, PayPal, or Cash App. The new rules lift the reporting requirement, reducing the flood of confusing 1099-Ks. For business owners, the 1099 miscellaneous reporting threshold has also been raised. That means less paperwork, fewer compliance headaches, and more time to focus on your business. A real-world example, Rachel runs a side business selling handmade crafts. Last year, she got 7 1099-Ks totaling over $600 from various platforms, even though most were personal transfers. Under the new rule, she'll no longer get unnecessary forms, and she only reports income she actually earns from her business. Provision number 7 is the employer-provided child care credit expanded. This is a hidden gem. The credit for employer-provided child care has been raised from $150,000 to $500,000 per year, and the rate jumps from 25% to 40% of qualifying expenses. Why is this important? Because attracting and retaining talent has never been more challenging. If you want to offer child care support, either directly or through a partnership, this is now a tax-smart way to do it. It's also indexed to inflation, meaning it grows over time. So a real-world example. Jonathan owns a 40% accounting firm. He partners with a local daycare to offer subsidized child care. He contributes $100,000 towards the program and gets a $40,000 tax credit in return. That support helps retain top staff and boost morale in a tight labor market. And finally, provision number 8, the estate tax relief for family-owned businesses. The estate tax exemption for small business owners has been permanently increased to $15 million per individual and $30 million for couples. This change ensures that when business owners pass on, their life's work can continue without triggering a massive tax bill. This is a huge win for multi-generational family businesses and a major planning opportunity. A real-world example, the Jones family has owned a family construction business for 40 years. The business is valued at $18 million. Under the old law, Their estate would have owned millions in estate tax upon passing it to their children. Now, with a $30 million couple exemption, the entire transfer is tax-free, preserving the business and its 75 jobs. So let's just bring this all together. What does this mean for you? Let's pause for a moment. That's a lot of change, but every single one of these provisions adds up to one clear message. Congress finally gave small businesses a leg up. Whether it's tax certainty through the QB1 deduction, capital investment flexibility through expensing and depreciation, or incentives for child care, estate planning, and administrative relief, this bill is filled with wins for small businesses. There's no better time to be a small business owner, as all of these additions to the tax code provide massive incentives to invest and grow your business, while at the same time putting more money into your pocket. Now that you know all the great benefits from the one big beautiful bill, here's what I recommend that you do. Sit down with your CPA and review every one of these provisions. Identify which ones apply to your business and determine how to leverage each one in order to maximize the benefits. Run the numbers. How much could you save in taxes this year? How about next year? How about over the next 5 years? Once you identify how much you're going to save, build a plan to reinvest that money in your business and into your employees. Review your entity structure. Is it time to switch to an S corporation? Should you rethink your capital strategy or benefit offerings? Figure out how to leverage these changes to your advantage. If you're planning to invest in equipment, staff, or facility, do it with this new framework in mind. Now's the time to take action. You've been given a huge gift here that will potentially save you thousands, maybe even hundreds of thousands of dollars that will help you massively grow your business. Don't miss the opportunity here, as we haven't had benefits for small business owners like this in a long time. So here's some final thoughts. As I always say, running a business isn't easy. If it was, everyone would do it. You shouldn't have to fight for scraps while big corporations get all the breaks. The One Big Beautiful Bill Act of 2025 is a rare moment of clarity. It's a rare moment of opportunity. And if you're smart, intentional, and proactive, this could be the best time in years to grow, build, and expand your business. If you enjoyed today's episode, please take a moment to subscribe, leave a review, and share it with your network. I'd also love to hear how you're planning to apply these changes in your business. You can always reach me at www.businesscoachchicago.com or find me online on LinkedIn. Until next time, I'm Tom Kelly, and this has been the Business Coach Unplugged Podcast. Enjoy your week and take action on these great opportunities.
You've been listening to the Business Coach Unplugged Podcast. On this highly useful podcast for people in the business world, you get the absolute top-notch info from an absolute pro on how to elevate your business and your leadership skills. Tom Kelly owns Potential in Motion, coaching you to the edge of what's possible. He's also a professional speaker and leadership trainer. He's worked with some of the biggest names in the coaching business: Tony Robbins, Ken Blanchard, Jack Canfield, Brian Tracy. To sign up for a complimentary coaching session and to access some great free resources, hit the website at businesscoachchicago.com. Your success is not just a possibility, it's a certainty. See you next time on the Business Coach Unplugged Podcast.